Welcome to Markets Now. I'm Michelle Rook along with Tomm Pfitzenmaier, Summit Commodity Brokerage. A mixed day in livestock, lower in the grains, in fact, brutally lower, Tom. And, how much of it was into the month profit taking versus, removing weather premium in especially corn and beans?
Well, it's a little hard to separate the two, but I think predominantly it was the weather. When we went home Friday, we were assuming things were going to be a little dry, maybe some improvement this week, but basically dry with a little bit of moderating temperatures. And it turned out there were some areas that got some pretty decent amounts of rain over the weekend. So that kind of set the tone for negativity when we opened up Sunday night, gapped lower. And then you add on to that technical, then you break down through technicals, which is negative. And then you have and everybody worried about how they want to be positioned for the end of the month. You've got first notice day on the August contract coming up here tonight. So there's just a lot of stuff that all of a sudden came together and put a lot of pressure on prices.
Definitely a perfect storm. Let's talk technically here because December corn did hold $5, but we did take out some pretty key support in November beans, didn't we?
Yeah, well, even in corn, I think there's a perception that 520 was going to hold, and we went right through that down to just slightly sub 510. So, yeah, you're right. We did hold $5, and that's probably the bigger number that people are going to be watching. There's a big expectation that 1350 was going to hold the November beans. We went through that like it wasn't even there. Ended up down at 1330 which has everybody talking now about going down to 13. Now, some of all this is an expectation about the crop condition rating report on Monday afternoon, with a lot of people thinking, no, there'll be a 1 to 2% drop, and that's probably about it. And I really wonder about that because practically every farm in the United States saw extreme heat last week. This survey that the USDA does is still based on as a farmer survey. And if you're a farmer looking out at your fields with not much rain and 100-degree temperatures, it's hard to believe you're only going to think your crop is down 1 or 2%. So that could be a big surprise for Tuesday morning if that condition rating comes in a little worse than we thought it was. Now that may stabilize this week. I guess we'll have to see, but that's going to be a big market driver for Tuesday. And Tuesday could very well be a turnaround Tuesday type situation where we recover some of Monday's losses.
Yeah, I was going to ask you if we were overdone with Monday's action, if the market is overreacting, taking this much weather premium out. I mean, is it warranted?
Well, who knows? I mean, is the corn yield 170 or is it 175? If it's 170, then it's not warranted at all. If it's 175 plus, then maybe it is. If it's 175 plus, we're probably going back down to 480 on December corn, but it seems pretty early for that to be happening. On soybeans, I don't know. You've in the mix here, you've got this 4 million acre loss of production. You add on to that a little crop problem and pull yield down to from 52 to 50 and a half, for example, and all of a sudden things tighten up quite a bit there. So I don't know. It just seems a little early going into this critical month of August to break it so hard. And all we've talked about for 2 months is how important August was. Well, we've got no subsoil moisture in most areas. While some areas did get rain, there were a lot of areas that didn't. Coincidentally, it did rain in Chicago, so that maybe that has something to do with it because a lot of the trade lives around that Chicago area. But I guess we'll have to see how the rest of this week shapes up.
Yeah. And I do know we did get a few rains over the weekend in some key areas once again, but so far it just seems like it's been kind of hit and miss. So, to take the market down this hard seems a little bit overdone. We also have kind of faded this soybean export news that we've been having come at us here. Flash sales even again this morning, another 4.85 million bushels. Are we fading that because we're behind in new crop sales so far, or why?
I think that's exactly right. We're way behind in new crop sales on corn and beans. So until we start getting maybe a little closer to being caught up, I don't think they're going to pay a whole lot of attention. We've had a really good meal sale announcement, so we really are benefiting from the dry condition, the drought really that they had in Argentina this spring, because they're big exporters of meal, and they just don't have the meal to export, and so we're really benefiting from that, which also translates back to a good crush demand to create that meal to export. So again, that's really it should be a positive for the market that we really haven't paid that much attention to yet. China has pretty much exhausted most of the supplies that Brazil is going to have, so we're kind of in the driver's seat at least through January, February.
Yeah, and the soybean oil market down pretty hard today. I'm not sure if that was end of the month profit taking too, maybe.
I think it's an immense profit taking, and just profit taking in general from a
General,
market that got overbought. The fundamentals for that are still pretty solid.
yeah.
The renewable diesel demand is going to be quite good for the second half of the year. So I don't see that market collapsing here by any means.
And what about the wheat market? Again, we have removed a lot of the war premium. Do you think that that is justified?
Well, a week ago Monday, we were limit up, and we were thinking we were heading straight to $8 because of all that war problems. Now, all of a sudden, a week later, the bombings, we aren't bombing every day, we're bombing occasionally. And so all of a sudden we're all good. I mean, I just don't see that being the case. Now there's grain going to move overland, and that's fine. It's going to supply some grain out of Ukraine, but the big quantity of grain for them to move comes through the port. So I just don't see that things have improved that much that justifies a big sell-off in the wheat market. Now, Russia's got wheat. Our crop is probably going to be okay. So maybe we probably got overdone a week ago on the upside, but I think we're in the process of maybe getting a little overdone on the downside, at least in the short term here in wheat.
Yeah, that certainly makes sense. Okay, let's move over to the cattle market. Live cattle futures under a little pressure. The funds are still long in that market. Again, was that some end of the month, or was the market disappointed because we had pretty sloppy crash trade last week?
Yeah, we did, and expectations are for it to be a little lower this week. There's been some talk in the trade about the fact that we had all this heat the last couple of weeks, and whether that's cut into the barbecue demand for beef. It's just people are just it's too hot to stand outside by a grill, and possibly that has hurt demand and maybe a factor. I don't know that. Like I said, I think the cash market's probably going to be just a shade weaker this week, and now we're going to have to sit and see if we've started to price beef out of the market a little bit at the retail level. We certainly have got pretty fancy beef prices, and it's relative to pork and poultry. So I guess we'll have to see if that hangs in there.
Yeah, and whether you got to believe that performance could have been very good last week in the feedlots.
No, it had. I mean, yeah. Well, I don't want to eat when it's that hot, so I can't imagine those critters out in the feedlot were all that excited about. So walking up to the bunk.
Yeah, no doubt. Okay, what about this hog market? We've called the seasonal top on this thing a couple of times already, and then kind of negated that, or the market blew through it, and the funds are still pretty long in that market. Are we getting close to a top or not?
Well, I mean, we've got some pretty high pork prices, but you compare that relative to where beef is, and pork stays pretty competitive with the cattle and beef. So I don't know. There's probably a little more up. I don't see it falling apart by any means. And you got to get pretty good discount. In October's back down to 86, 85. December's down around 77. So I don't know. I don't see those distant months falling apart all that much from these levels.
Yeah, no doubt. We've got kind of a two-tiered market going, so we'll see how that all shakes out.
Right.
All right. Thanks for joining us, Tomm Pfitzenmaier with Summit Commodity Brokerage. That's Markets Now.